What is up, my trader homies? It's your boy Kevin from Touchdown Trades, your trading BFF, your stock market bestie. Today we're going to be talking about this Tesla stock, which is up over 300% since the lows of the coronavirus, and just posted an earnings beating expectations, posting 4 straight quarters of profits. So its first year of reporting a profit in every single quarter, and it is up about 5% after hours. So in today's Touchdown Trades market analysis, we're going to be breaking down this Tesla stock. I'm going to be showing you this swing trade that I currently have open on this Tesla stock, and I'm going to be talking about how I'm going to be looking to trade this over the next days and coming weeks. The stock's made an insane move, and we have to trade it properly. We have to use risk management, or we could get hurt pretty badly. So let's break down this chart. Let's break down this Tesla stock in today's Touchdown Trades market analysis. All right, trader homies. So we're breaking down this Tesla stock today, and it's up currently about 5% after hours. We're trading in the $1,600 range pretty much all day, just chopping around in this tight little range we had going on. And Tesla just reported an earnings beat, posting a unexpected profit, and that sent it up about 5% after hours. We got the earnings beat as a catalyst that we need to talk about. So we have the first full business year, 4 straight quarters of Tesla posting a profit, which is absolutely huge for a company that has been criticized for burning money, not posting profits, and kind of just its haters had been saying that, wait a second, how can this be valued as high as it is when it is not even making money? Well, it may not be making the money that other auto manufacturers are. The valuation isn't equivalent to the other big auto manufacturers, but now they're posting a profit. So how can we trade this thing, and how can we profit off of this insane move that Tesla is currently in the midst of making? Well, first I'm going to show you guys the trade that I have on, and then we can talk about the chart. We'll break down the daily chart and kind of like the weekly chart, and we'll talk about how I think Tesla might react to this earnings beat. Okay, so first let's take a look at the trade I have open here. If I can find it, here we go. All right, so what I have open is an options trade. It's a swing trade. It's called an iron condor. So the first thing I did is I sold 3 contracts of each 1490 put. I sold 3 contracts, and then I bought the 3 1480 puts, and then I sold 3 1690 calls, and then I bought 3 $1,700 calls. And I'll talk about this more when we're looking at the daily chart, but I sold this for a net credit of $700 per contract, resulting in a total of about $2,100 for the 3 contracts that I took a credit in for. So let's jump over the daily chart and I'll explain the logic on this trade. Okay, so these red lines represent where Tesla needs to be trading inside of in order for me to keep the credit at expiration. So as long as Tesla's trading inside these 2 red lines, I keep the $2,100. But if Tesla's trading, say it's 1701, then I won't keep the entire credit. If it's trading above 17, I believe, if it's trading above 1700, then I will be negative money on the trade. So basically my logic is that Tesla's made this huge run up. You know, you have crazy amount of traders buying calls and puts into the earnings, and smarter traders aren't going to be trading earnings based on direction. They're going to be trading based on volatility, crush. And what that means is the expected move on this Tesla, I think was like 12 or 13%. And the only thing I was betting on was that the move was not going to be as drastic as traders were expecting. So I got $7 per contract. Let me hide my face real quick. Okay, I got my face hid. So I got $7 per contract, and I was $100 out of the money each way. So Tesla was trading at like $15.90 when I sold these iron condors. So I got $100 to the upside protection, $100 to the down protection. So basically the market was telling me that there's only a 30% chance that Tesla stays within this range. And I thought that was extremely low, and I took advantage of what I thought was an edge that I was getting. So I thought there was about a 60% chance that Tesla trades in this range at expiration. And the market's only telling me there's a 30% chance. That's how you make money trading stocks, is when you see discrepancies like that. So I'm only risking about what? I'm getting more than 2 to 1 on this trade. So it's just an all-around good trade. Even if I lose, I'll take it again next week if I'm presented the opportunity, because I believe I have an edge on this setup as we're trading after hours right at 16.90. So if we do get a break to the upside and break these highs, I'll be down on the trade. But if we can stay down here in this area under this red line, then at expiration I'll keep the entire credit. But even if it does break up there, I'm cool with it, as I think I took a nice trade. So that's the trade that I took. Now let's break down the charts. So if we look at the 1 year, 1 day chart, we can have this nice trend line that we've interacted with several times up, and it's been responding well to it on the intraday chart. We have a nice touch here, nice touch here, and we came down and touched it here. And then once we finally broke below it, we got that sell-off, and we've been interacting with it pretty steadily over the last week or so. If we look at a 5-day, 5-minute chart, we can see that this purple line is that trend line off the daily, and we've hit it once, twice, 3 times. We broke over it, got a huge move, and then the past few days we've been consolidating above it on the screen here. So what do I think about this move in Tesla? Well, first we need to take a look, and we need to talk about Tesla's market cap, which is kind of crazy. Let me hide my again. So Tesla has a market cap, current valuation of $295 billion with a B. So let's take a look at some other auto manufacturers. I know you guys are going to be saying, Kevin, wait, Tesla's not an auto manufacturer, they're a technology company. I'm a believer in Tesla, but that's BS. They are an auto manufacturer all day long. Don't give me that nonsense, okay? I'm not a hater. I'm not a Tesla hater. I'm not a Tesla short. So don't come at me in the comment section because I'm saying they're not a technology company, okay? Chill out. Okay, but first let's look at Ford here. We can see that Ford, the map is what? I think it's 29 billion. Look at GM. I'm only going to look at American auto manufacturers. I'm not going to look at like Toyota and Honda, because Tesla is an American company, right? So we got GM at 38 billion. So even if you add the market cap of Ford and GM together, you only get what? 67 billion. Tesla at 295. Tesla, $295 billion market cap, more than 3 times Ford and GM combined, okay? So once again, I am not a Tesla hater, but this number of $295 billion market cap is warranted, okay? I'm not saying I'm going to get short Tesla and that I think it's going to crash. I'm just saying from a financial standpoint, it is overvalued. And I think we're gonna see Tesla kind of digest earnings beat up here and chop around before consolidating, maybe even heading a little bit lower over the next month or so. We can't continue this outrageous move higher, but this move higher, Tesla's reported some unexpected quarters, better than expected deliveries and production. Okay, I get it. But that is not causing this move. That is not the catalyst of this move. The catalyst of this move is this. Let's go back to FinViz real quick and look at Tesla. The catalyst is right here. Percentage of short float is extremely high. It's not as high as it has been in the past. That's because all the shorts are blown out because of this move here, okay? This move is not caused by earnings, beating earnings expectations, beating delivery expectations. This move is caused by short sellers getting blown out of their position. That is the cause of this move. And now that the short sellers are mostly out, all the early shorts in this area, down here are blown out. Now that they're out, it's time for Tesla to come back down to earth, maybe retest these previous highs around $1,000. I know that some of you guys are going to get mad at me for saying that, but I just feel like we need to consolidate, maybe even for the next year or so. This move is kind of getting crazy. It needs to breathe. It's healthy for stocks to pull back. It's not for stocks to go like this. Just look at this Nikola. For example, I'm not comparing Tesla to Nikola, so just chill out, all you Tesla freaks out there. But look at this. This is not a healthy move, okay? And look how it's responded since. Once you make a move straight up, if there's any bad news, it's headed back. The only thing keeping Tesla from really pulling back is the short sellers getting blown out. So I think Tesla's a really good company. If it makes a drastic pullback, I'm down to get long. But right now, we can't safely trade it because this move is just a short squeeze. That's pretty much all it is. I like Tesla. Don't get mad at me, but we got to come back down to earth. I hope you guys got something from this touchdown trades market analysis today. If you did, hit that like button for me. If you're not yet a subscriber, smash the subscribe button down below. I appreciate you guys watching, and I'll catch you in the next video. Peace.